Welcome to the Deep Dive. This is where we take a stack of recent reports, research, our own insights, and really pull out the most important nuggets of knowledge for you. Today, we're doing a real-time deep dive into the forces shaping our world, like right now. Think of it as a snapshot of today's headlines. Everything from corporate earnings, geopolitical tremors, even what big companies might be eyeing next. We've got a really fascinating mix of sources today. There's an earnings report from a major restaurant chain, updates on global markets, insights into domestic policy affecting businesses, and even a peek at a pretty big upcoming consumer shopping event. It impacts millions.
Yeah, and our mission for you today is really to connect these dots because they might seem separate, but they're often not. We'll look at how things like, consumer spending, international tensions, these huge big tech ambitions, how they're all interconnected, hopefully offering you a clearer picture of the economic and social landscape you're navigating. What's really striking here is just how quickly things can shift,
Yeah.
even within a single day, right? And
Yeah.
how those shifts ripple out.
Exactly. Our mission today is to connect those seemingly disparate dots. And, there's really no better place to start understanding the big picture, the macro trends, than by looking at the micro choices we all make every day.
So let's unpack consumer spending, starting with dining out. We're kicking things off with a look at how consumers are spending money on dining. Darden Restaurants, that's the company behind Olive Garden, Longhorn Steakhouse, they just released their Q4 results.
Right. Now, at first glance, the raw net earnings, they dipped a little bit, down to $303.8 million from $308.1 million last year. But what's really insightful, I think, is their adjusted earnings per share. That actually rose to $2.98, and that beat analyst estimates, which were around $2.97.
Okay, so adjusted is key here.
Exactly. That adjusted figure, it strips out, the one-time costs, things like their recent Cho's acquisition, some restaurant closures. It gives you a much cleaner look at the underlying health of their core business.
Right, got it. And the sales picture, how did that look?
Pretty robust, actually.
Yeah.
Total sales grew 10.6% to $3.27 billion.
Yeah, also exceeding analyst expectations. And this was driven by a couple of things. A blended same restaurant sales increase of 4.6%
Okay.
across their brands, plus adding those 103 chip fees restaurants and 25 other net new locations.
So solid growth. Their CEO, Rick Cardenas, even said they exceeded our expectations.
Yeah. And if we zoom out a bit, connect this to the broader consumer story, you see some really interesting performance within their segments. Olive Garden's sales jumped to $1.38 billion. That's with 6.9% same restaurant sales growth.
Oh.
And Longhorn Steakhouse saw similar strength. Sales grew to $833.8 million, 6.7% same restaurant sales growth there. So it suggests, pretty strong continued performance in that casual dining space.
But their fine dining segment, that saw a 3.3% decline in same restaurant sales,
Right.
right? Even though overall sales for that segment went up slightly. That seems like a bit of a contrast.
It does. It really does.
What do you think that tells us? Is that like a broader economic signal, maybe people pulling back on luxury? Or is it specific to Darden?
That's a great question. And I think, honestly, it's probably a bit of both. While the overall sales for fine dining did increase slightly to $334.6 million, mostly because they have more locations, that decline in same restaurant sales within the segment, yeah, that definitely raises an important question. It points to different consumer behaviors across those dining tiers.
Okay.
It suggests that while people are still willing to spend on experiences, maybe they're becoming a bit more budget conscious, That dip in fine dining could reflect a shift. Pulling back on the real high-end stuff, while the perceived value of let's say, a quality casual meal is holding strong, maybe it's seen as a more affordable, reliable treat in this kind of inflationary environment.
That makes sense. They also made some moves for shareholders, didn't they?
They did. Declared a higher quarterly dividend, up 7.1% to $1.50 per share, and they authorized a new $1 billion share buyback program.
And looking ahead, fiscal 2026.
Yeah, they're projecting net earnings between $10.50 and $10.70 per share, and about 7% to 8% total sales growth.
Which is slightly below what Wall Street was hoping for, I gather.
Just a touch below what the street, as they say, was looking for on both earnings and sales. Yeah.
Okay, so that Darden report, it gives us a real pulse on sort of everyday consumer spending.
Yeah.
But when it comes to those bigger, maybe more deliberate shopping decisions, there's one event that looms pretty large, and we just found out when it's happening. Okay, this is where things get really interesting for anyone who, loves a good deal. Amazon just announced the timing for Prime Day 2025.
And what's really notable this year is just how long it is. Prime Day will run from July 8th to July 11th. That makes it a 4-day event.
4 days, wow.
Yeah, it's the longest Prime Day sale ever. Kicks off 12:01 a.m. Pacific time on July 8th, runs for a full 96 hours. It really shows how these huge retailers are pushing the boundaries of what a sale even means anymore.
So for you, the consumer, looking to grab those deals, what do you need to know? Still need to be a Prime member, right? That costs $139 a year or $14.99 a month, though there is that 30-day free trial for new folks.
Right. And it's good to remember there are discounts. Students, young adults, can get it for $69 a year. And some government assistance recipients are eligible for a reduced price, too.
Okay.
You know, this really highlights how these massive sales events, Prime Day only started back in 2015, how they've basically become retail holidays. They stand right alongside Black Friday, Cyber Monday now.
Totally.
Amazon's promising discounts on, well, pretty much everything. Back to school stuff, toys, pet essentials. And for the first time, they're doing these today's big deals like themed daily deal drops. Limited time, limited supply.
It's a bit of urgency.
Yeah, exactly. But this also brings up an important point about market strategy. Amazon's events, they almost always trigger immediate copycat sales from other big players like Target, Walmart.
Right, you see that every year.
So keeping your options open, checking other places, that can be key to finding the best value, not just, the first deal you see. It creates this ripple across the whole retail landscape.
Yeah, absolutely. And while Prime Day connects consumers with deals, it also relies on these incredible global supply chains, right? These massive logistics operations. And speaking of global stuff, the world stage itself is seeing some pretty significant shifts with immediate impacts on markets. Let's shift gears now to some of those bigger, more global forces. Markets are always kind of on edge when there's geopolitical uncertainty. And right now, tensions between Israel and Iran are a major focus for investors.
Yeah, and it truly highlights how incredibly sensitive markets are. It's not just about what actually happens in a conflict, but about any perceived shift in mood or, diplomatic possibility. So Friday morning, U.S. stock futures, they initially edged lower. Dow, S&P 500, NASDAQ 100 futures all slipped a bit.
Okay.
And that was a direct response to news about the air war between Israel and Iran intensifying. It had entered its second week. The White House had even commented, saying President Trump would decide on U.S. involvement within 2 weeks, but also noting a substantial chance of negotiations.
Right, that negotiation hint is key.
Yeah.
But then, almost immediately, things flipped.
Exactly. Dow, S&P 500, NASDAQ futures, they all went higher after a report came out indicating Iran might be willing to discuss limits on uranium enrichment.
Wow, that's fast.
Yeah.
Shows how much markets hang on any sign of de-escalation.
Absolutely. And just for context, this conflict, it started with Israel's attacks on Iranian nuclear sites, which Israel claimed preventative. Iran responded, insists its program is peaceful. Neither side has officially backed down. European foreign ministers were actually set to meet their Iranian counterpart in Geneva on Friday to try and, ease things. So what we're seeing is how algorithms and just human emotion can amplify even a whisper of hope into immediate market moves, often before anything concrete changes on the ground.
And the oil market's been jumpy, too, I imagine.
Oh, definitely volatile. Brent crude futures, they initially slumped on Friday after those White House comments, even though oil was actually on track for its third positive week in a row.
But it spiked before that.
Yeah, prices jumped nearly 3% on Thursday. Traders were worried the conflict could disrupt crucial supply flows, especially through choke points like the Strait of Hormuz.
Right, always a concern.
And the U.S. dollar also lost a bit of momentum amid all this uncertainty, kind of a flight to perceived safety elsewhere.
Okay, so beyond the geopolitics, there are also some massive business deals happening and some really future-focused projects making headlines, stuff that could shape industries for decades.
Yeah.
First, a big play in the building material space. It seems timely with the housing situation.
Yeah, what really stands out here is the fierce competition brewing for GMS. They're a major building products distributor. Home Depot is reportedly making an offer, that's according to the Wall Street Journal.
Okay.
And this comes right after QXO, that's led by the dealmaker Brad Jacobs, submitted an unsolicited $5 billion cash proposal just earlier in the week.
$5 billion. Wow, so a bidding war potentially?
Looks like it could be shaping up that way. GMS shares definitely soared on the news. It really underscores the intense interest in the building materials sector right now. A lot of that is driven by the ongoing need for more housing. Signals confidence in the long-term construction outlook.
Interesting. And then moving from building materials to, well, something truly audacious.
Yeah.
Decades into the future stuff. SoftBank founder Masayoshi Son is reportedly pitching a colossal What, a $1 trillion AI-dedicated complex
Yeah.
here in the U.S.?
Yeah, colossal is the right word. It's incredibly ambitious. This concept, Bloomberg News is calling it Project Crystal Land.
Hmm.
Sun is reportedly looking to partner with chipmaker TSMC, that's Taiwan's semiconductor manufacturing company, a huge global leader in advanced chips,
Right.
and the Trump administration. The goal? Build a manufacturing hub, an industrial complex that could rival China's Shenzhen in scale and high-tech output.
Rival Shenzhen. That's
Crazy.
bold.
It's very bold. And it's focused on bringing advanced manufacturing back to the U.S., which, clearly aligns with the current administration's goals. It really makes you ask about the sheer scale of investment needed, right? Both private money and probably government incentives for something this huge.
$1 trillion doesn't just appear.
Exactly. It would apparently include production lines for AI-powered industrial robots. Sun has reportedly talked about potential tax incentives with U.S. officials and reached out to other big tech firms, too. Highlights the immense coordination needed for something like this.
Definitely one to watch.
Yeah.
Okay, let's bring it closer to home now. Domestic policy is also creating ripples, particularly around immigration and its complex impact on businesses.
Yeah, and the striking thing here, I think, is the sort of mixed messaging businesses seem to be getting from President Trump about the ongoing immigration raids. On one hand, he's apparently said changes are coming to protect some businesses. But on the other hand, he's delivered a pretty direct message to undocumented workers. We will find you and remove you. That kind of dichotomy, it creates significant, very practical uncertainty for industries that rely heavily on immigrant labor, makes it hard for them to plan.
Yeah, I can imagine. And this issue has escalated, right? The raids are reaching deeper into the labor market.
Seems so. Businesses are trying to get clearer answers, about who's being targeted, whether they'll face penalties.
Yeah.
President Trump stated the administration is trying to weigh both sides, acknowledging the need to, quote, take care of our farmers and people that run leisure hotels.
Right. Industries often cited.
But also emphasizing the priority to, quote, get the criminals out of our country.
So balancing economic needs with enforcement priorities.
That seems to be the tightrope they're walking. And if we put this in a broader context, reports keep surfacing about disruptions. Some Republicans have even warned about potential agricultural shortages, maybe higher food prices as a direct result. A Goldman Sachs analysis looking at 2023 census data provides some perspective here. It found that immigrants living in the U.S. illegally make up about 4.4% of the overall workforce.
Okay, 4.4% overall.
But that number jumps way higher in specific sectors, like about 1 in 5 landscaping workers are likely undocumented. And agriculture, food processing, construction, they also show double-digit rates of reliance on this workforce.
Wow, 1 in 5 in landscaping.
Yeah. So the big question this raises is about the actual economic impacts of these policies on those key industries, especially given their role in, the supply chain and just everyday services we rely on.
And the official response, Homeland Security.
They've pushed back on the critiques. They state their efforts are aimed at, quote, illegal employment networks that undermine American workers, and that, quote, there will be no safe spaces for industries who harbor violent criminals.
Okay, so quite a complex picture there. All right, so we've covered a lot today. From Darden's performance, showing those shifting consumer habits, the biggest Amazon Prime Day ever coming up, to those rapidly shifting geopolitical tides hitting global markets, and the really complex nuances of domestic immigration policy right here at home. It's clear, isn't it? Everything is truly interconnected.
It really is. And that compels us, I think, to ask you to consider this. How might these seemingly distinct news items, like Darden boosting its dividend, showing shareholder confidence, the market's hair trigger reaction to Middle East tensions, that quest for a $1 trillion AI hub aiming to reshape manufacturing, and the economic ripple effects of immigration policy on our labor force, how might all of that ultimately converge? How could it shape your own daily experiences, the economic landscape you live in? How do these micro trends and macro forces interact? Sometimes in ways that might really surprise you, creating unexpected opportunities, maybe unexpected challenges.
Yeah, lots to think about there. We hope this deep dive helps you feel just a little more connected to the powerful forces playing out in the world around you.